Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Wednesday, August 5th, 2020, and I am pre-recording this Trading Places Live for Thursday morning, August 6th. Going to be a very interesting day tomorrow because I did see in after hours three of the top market cap stocks that were reporting earnings after the bell all missed. We'll take a look at the market reaction to those. And as well, take a look at a lot of other things. Just go ahead and go through the schedule with you. We'll start off with the daily market recap. Going to get into talking technically. Really want to take a look at the transports, maybe take a quick run through some of the commodities. Then we're going to get into scooter reports, and I'm going to stick with the transports theme and just take a look at some of the stocks that maybe we should be aware of with the transports breaking out today. Then we'll get into earnings spotlight and wrap up the show with three you must see. But before we get into any of that, I got to tell you, we've got a big event coming up on Monday, August 10th. It'll start at 4:30 p.m. Eastern Standard Time, so just after the market closes on Monday. And it's going to be a free event, but it's going to be a free event to our Earnings Beats community. So if you are not already at least a free Earnings Beats Digest subscriber, no credit card required. You can unsubscribe at any time. Go to earningsbeats.com and you'll see this right here. Just type in your name, email address, hit the subscribe. We'll start sending out our 3 times a week newsletter to you. And we'll also be sending out instructions for how you can join our webinar on Monday. Now, the webinar on Monday is going to be a sneak preview of our top 10 stock selections for each of our portfolios. And if you're not familiar with our portfolios, right over here in the lower right-hand side, you will see our portfolio performance relative to the S&P 500 since inception and then also this quarter. And I think you'll see as you go through and look at these numbers, these are pretty impressive numbers relative to the S&P 500. And so on Monday, I'm going to talk a little bit not only about performance, but also our research and just our strategy in putting together these portfolios. I think it'll be a really timely event. It'll give you a really great insight into how we look at the market, some of the things that we look for when we're putting together these portfolios. So I think the information will be really valuable. And again, all you have to do is just be a free newsletter subscriber. If you want to join the service and try it out for 30 days, there's a fully refundable $7 30-day trial. So you do have to put your credit card in. You'll get hit for $7, but we'll refund that back to you within about a week. So literally you have 30 days of no cost service to try everything out. And that will include our August 19th webinar, which is a paid event. You have to be a member for that. But our 30-day trial will cover that. So you can think about joining. That would be the easiest way, just to attend all of our events, get all of our services, and see what you think over the next 30 days. Anyhow, wanted to mention that. Make sure if you haven't already, at least at a minimum, sign up for that Earnings Beats Digest newsletter, and we'll be sending out information about next Monday's event. All right, let's move on to the daily market recap and take a look at what happened today. I feel like a broken record, but market went higher, continues to move higher. Look at the Dow Jones now threatening to break out above that June high. The S&P 500, 3328 now, rounded. We're within about 65 points of an all-time high, maybe 67 points, something like that. So we're only talking about 2% away now from setting an all-time high. Who thought? I mean, raise your hand if you thought that back in March. I thought we were going back to all-time highs. I don't know that I would have said I thought it was going to be in early August, though. And the NASDAQ's already 2 months into setting all-time highs. NASDAQ continues to move higher. Also leading today, mid caps up almost 1.4%. Look at small caps up more than 2%. Also trying to take out that June high. So we're beginning to now see money rotating into some other areas. And while that may impact some of the growth stocks that maybe you've been enjoying for the last several months, trust me, you want everybody and everything, every company participating in this. That's the real composition. That's when you know you have a secular bull market, is when we're getting participation from every nook and cranny of the market. And that's what we're beginning to see. Look at the sectors leading today. This is being pre-recorded for Thursday, so by the time you're listening to this, it'll be yesterday. But industrials up almost 2%. Materials, 1.5%. Financials, 1.37. When was the last time we talked about these three groups leading? I mean, materials have been doing better, but industrials and financials have been weak on a relative basis. Look at the industrials getting close to a breakout. One of the reasons, transports. I'm going to talk about those in just a minute. Discretionary, making a new high. Even though on a relative basis, this group maybe has taken a back seat a little bit of late, still breaking out to new highs. I mean, new highs are new highs. Energy starting to strengthen again. Dollar, pretty weak again today. I'm really surprised, to be honest. I mean, I'm not going to sit here and try to argue for the dollar going higher. I think as long as, the trend line was holding, that's exactly what I would be arguing about and for. But that long-term trend line has been broken to the downside. I'm not married to a stronger dollar. If we, are in an environment where the dollar is going to continue to weaken, that's fine. But what you have to know are the consequences of that. And if the dollar is starting to weaken, materials and energy are two areas that we definitely want to at least begin to consider. And, I got an email from a member at Earnings Beats not too long ago and saying, something about, finally, you're getting on board the materials train. Well, for me, it's about big picture. And the long-term big picture, I mean, materials have been underperforming for 9 years. Same with energy. So if they're underperforming the S&P 500 for 9 years, I'm not late to the party. I've been in a pretty good spot, to be honest. But I recognize when we start to change. And if you don't catch a change in the, at the very bottom, I'm not trying to bottom fish. I'm not trying to catch the very bottom. I want to be able to catch the rotation that changes the outlook on things. And that's kind of what we're seeing right now. I don't, if you're thinking that, materials is a one-hit wonder for a month, well, I'm not interested in that. I want something that's going to last longer. And so, yeah, it's going to take a little bit more evidence to me than just seeing gold go up for a month. Well, gold's been going up for a while, but I mean on a relative basis. Anyhow, really, really strong day. You don't see technology on this leaderboard. You don't see communication services, but it's still a strong day no matter how you cut it. 10-year Treasury yield. Let's take a look here because this is one of the things that helped the industrials and the financials today. We did get a move up. You can see that we rose about 3 basis points back to 0.54. Don't write home about it. We haven't exactly turned the corner here in this downtrend, but I'd rather be up than down. And I know anybody investing in financials and industrials would probably say the same thing. They want to see the 10-year Treasury yield moving higher because we tend to see relative outperformance. Now, at the bottom of this chart of the 10-year Treasury yield, I have the financials relative to the S&P 500. And this is a one-year chart. I mean, if you look at it, you might even think you're looking at the 10-year Treasury yield. I mean, here's the 10-year Treasury yield. We go down, back up, back down. And here's the financials relative to the S&P 500, not an absolute chart. I mean, we saw the XLF I just showed you on that chart a second ago. If we go back over and look at the major indices, here's the absolute chart. I mean, we got a nice uptrend going here on the absolute chart. I'm talking about on a relative basis. That is not an uptrend. That's a downtrend. So yes, financials are going up on an absolute basis, but they're underperforming on a relative basis, which is really important because if your goal is to outperform the S&P 500, it's going to be hard to do it with financials when they're underperforming the S&P 500. So financials definitely have been rough, but we got a little tick here to the upside in the 10-year Treasury yield. And we got a little tick to the upside in relative strength on the financials today as well. The next panel here is the correlation. So in other words, how positively correlated are the 10-year Treasury yield versus the relative strength of financials versus the S&P? Well, we're up in positive territory most of the entire year. So I'd say there's a very positive correlation. Now down here, I'm doing the same thing with the industrials. Do you see the kind of the same pattern? Down, back up, back down. Look at the correlation. Not as strong a positive correlation as with financials, but still pretty strong, mostly in positive territory. And also seeing a tick up in relative strength on the industrials. So all of that, I think, is at least telling us that, hey, maybe if the 10-year Treasury yield can get going, some of this rotation that we saw on Wednesday may carry over. And that's something to take with you into Thursday. Transports, I want to talk about this because we were getting up close to this breakout level. And I actually thought maybe what we would have is an equal high, and maybe we'll have a false breakout and pullback. But I do think longer term we're going higher in the transports. I was thinking maybe we'd get equal high here and then pull back one more time with August and September, not being great time for stocks. Maybe we'd pull back, start, this could be the A, B, C, and then a pullback could put a low in, a D, in an ascending triangle pattern off of an uptrend. That was one of the things I was thinking we might see if the market were to sputter in August and September, but market had other thoughts. We got the breakout above that June high. Got to respect breakouts. And this is another group breaking out. Look at this volume picking up today on this breakout. This wasn't an ordinary breakout. This was a heavy volume breakout, which to me is more meaningful. So we've got institutions, we got more folks getting behind the transports as they make this breakout. Next stop, as far as I'm concerned, 10,500. That was a triple bottom here, breakdown at 10,500. That's another 2.5 to 2.75% to the upside. So I think things are maybe even 3%, pretty close. So we still got room here on the transports to the upside now that we've made the breakout. Now, when we look at transports, you say, okay, all right, that's transports. What do each of the groups look like? Well, let's take a look at the truckers. I mean, I see this has been the leading part of transports. Truckers have been awesome. We have been trending almost constantly above the 20-day moving average. With this little time here in mid-June is the only exception. We have essentially traded above the 20-day EMA now since back at the beginning of April. So we're talking 4 months now. That's a trend, and that's a strong trend to the upside. Truckers still look good. How about railroads? Well, railroads, you can see big move up. I don't know. I think we're about ready to complete the right side of this cup, or maybe we'll have equal highs and pull back, maybe put in an ascending triangle. I don't know. But we've got an uptrend, and I look for continuation patterns when I see uptrends. So I think that the move over the last 4 days that we've seen in railroads, starting with last Friday, I think this has been very bullish. Last Friday, we were breaking down intraday. And look at that recovery to hold on to the 20-day moving average. And now look at this move back to the upside. Now, when you see prior moves down below the 20-day and recoveries into the close, I mean, we've seen this multiple times. That generally leads to more buying. I'm expecting railroads to go higher from here, and that could be one of the key areas that drives transports higher. How about airlines? And I'll say this, not a fan of airlines. They continue to drift lower, but one positive that I will say, and I haven't really talked about this, is that on the way down, one of the driving forces behind me being bearish airlines was that accumulation distribution was going down just as fast as the price action, which tells me not only were we gapping down back in March and April like we were in all different areas of the market, but we kept selling off during the day. That's how the AD line continues to go down. Now, when you bounce, you expect the AD line to come up. But over the past 2 months, we've been declining again. And if you look at where the AD line was back on June 5th, which was Friday, and June 8th, look at where we were and look at where that AD line is right now. We're about even. Prices have deteriorated quite a bit. And now we're just moving back up above the 20-day. Airlines actually could see a little bit of a move. Now, I'm not a big fan of airlines, but you do have to consider the possibility that maybe the market has priced in the worst for airlines and cruise lines. And maybe as we start moving into the third quarter, fourth quarter, get closer to a vaccine, these are groups that maybe could be poised to run for a bit because they haven't participated at all. I look at airlines. I mean, we were at 270. Now we're at 130. We're still more than 50% below where we were in February, while all these other groups are breaking out to new highs. There's something to be said that maybe on a relative basis, a lot of market participants are going to look at airlines and say, well, yeah, it's still risky, but there's a lot of value potentially that could be unlocked with a vaccine. And I think that's a little bit of what's going on here. And I think that's why we're not seeing that AD line falling back too far. Let's talk a little bit about some commodities. And I would be the first to admit I have not been a big fan of the commodities. I've been waiting to see if the dollar is going to break down. I didn't want to jump in and chase right as the materials or right as the dollar hits a major low and then starts to trend higher again. So I've been on the sidelines for the most part, and I've said multiple times about gold over the last several months that, hey, if you want to trade gold in the short term, on the bullish side, long side, go at it. It's not one of my favorite areas, but as long as the trend remains higher, go at it. But if that trend reverses, you want to make sure you have your stop in play. So I haven't been bearish gold, bearish silver, and bearish commodities, bearish materials. I just haven't been as bullish as I am other areas of the market. That has changed a little bit. I mean, when the dollar breaks down, the dollar's got to show me something. If the dollar continues, and let me pull up the long-term chart of the dollar, give you an idea of what I'm talking about here. So here's a monthly chart, and I'll annotate this just so you can see this line. But if I connect this low down here, and I connect these prior, I mean, I think it's pretty clear now that we have broken down below this trend line. And when we were trending lower in the dollar back from 2000 to 2010, 2011, or well, really we hit a bottom 2008, went sideways for a few years. But the whole time that the dollar was trending lower, much of that time, we were in a bull market from 2002 to 2007. And during that period, materials and energy commodities were leading that move. One of the reasons why, and the big reason why, is the dollar was declining. So with the dollar breaking down, if this is truly the start of a major decline in the dollar for a period of time, materials and energy very well could be our leaders going forward. And we've had a lot of strength in other areas, and I expect technology is going to continue to do well. I think that consumer discretionary will continue to do well. Same with communication services. But will they be the ultimate leader if the market continues to rise? I don't know. I think materials and energy could take over for a period of time. Now, energy, even with the dollar being weak the last couple of months, energy has struggled, but we're starting to see some of that turn, and I'll be watching to see if that continues. But this is the reason why I'm considering changing my opinion. Now, if you're wondering, well, why didn't you change when materials were starting to move back in March and April? Well, we've seen plenty of periods, short-term periods, where materials have moved when the dollar has weakened. We saw that back in 2017. We saw it a little bit back in 2013. But in these instances, when the dollar hit trendline support, dollar reversed back up, materials underperformed. So you've got to be careful. There's a really strong connection between the direction of the dollar and performance, outperformance versus underperformance of materials and energy. All right, so I pulled up gold. Let's going to go to the daily chart here. Let's pull up silver. I mean, hey, silver's been on quite a roll too. Huge move. At some point, we'll get a pullback, but as long as the dollar is in breakdown territory, that pullback to me is going to be viable. Copper, sideways consolidation after a big move up. I think this is a good basing for copper. I expect we're going to see a breakout. And then just looking overall at the CRB index, you can see breaking out to new highs and trending higher. Look at the trend. It's staying above the 20-day, but now its acceleration is starting to the upside, which I find much more bullish. And then the last thing I'll show you here in terms of commodities, look at crude oil prices. Today closing above $42 a barrel. First time we've seen that now since we had the big drop back in early March. So we continue to trend higher in crude oil prices. All right, let's move on to the scooter report. What I want to do, as I was talking about transportation, is I'm going to go in and let's go to the dashboard and let's pull up scooter reports. And we come up with large caps. That's the default. And then if I type in transports, unless it has the name in the title of the company, nothing's going to come up. What I really want to look for maybe is, let's just pull up truck, for trucking. And you'll see large cap stocks. Here are the three truckers. C.H. Robinson, Old Dominion Freight Lines, J.B. Hunt. C.H. Robinson's got the highest scooter score, so let's pull it up. Well, check this out. Big volume, nice gap up. I actually think gap support comes in at about 92. I think this is a stock that's going to go higher. We've been basing for a long time. Look at the daily PPO. I think not only do the truckers look good on their own chart, that index chart, but you're going to find some of these individual stocks within the space looking very strong as well. Old Dominion's pulled back, so this one hasn't been running as much. Look at that bounce, perfect hammer right off the 20-day moving average, which has been holding for the last 6 weeks or so. I think ODFL looks good. Go into JB Hunt. JB Hunt pulled back. Look at the hammer on the 20-day. I love these pullbacks and reversing candles. Talk about them all the time. Since that reversal back to about 128, 129, now we're back up to 132 almost, and looks like we're maybe charging back toward those highs that we saw in mid-July. All right, going back here though, let's get out of trucking. How about railroads? Well, railroads here, Kansas City Southern, talked about this one. Or maybe I didn't talk about it, but this is one that I really liked. I actually sent this out to our members. I talk about stocks so many different times, so many different places. Sometimes I can't keep track of exactly where I talked about it, but I know I talked about Kansas City Southern before it made this big move to the upside. It had a nice run. I thought it was in a flag right back to that 20-day, and then it just exploded with big volume. I see this one breaking back out. Another one that looks great in terms of its PPO. Union Pacific. Now, the rest of these scooters aren't as strong. And I don't know, maybe we can look at mid caps. They're also in the 60s. Let's pull up Canadian Rail. This one's got a scooter score 66. It just broke out above that January high. I think this one looks really good. Pull back to test the 20-day moving average, and I would be a buyer. Nice accumulation distribution on this one as well. So that's how you can go back and take a look at the scooters. Once you find areas of the market that are starting to look better, use that as to your advantage and go back, find that scooter report, and zero in on some stocks that might meet some of your strategies. All right, let's move on. We're going to move into earnings spotlight. Going to start off with 3 of these companies that reported after the closing bell today. And these were the 3, I believe, the 3 largest market cap companies, and all 3 came up short. Now, Fiserv came up with 93 cents in earnings. The market was expecting 94. The stock, though, responding pretty strongly, up 1.5% after hours. I just think after the big move up in the high in June, on a relative basis, this has not been a very good stock. Yeah, it's up a little bit. I just don't see anything here that I like about this particular stock. How about PSA? This is Public Storage. They also missed. $2.46 was the actual. Market was expecting $2.52. Came up 6 cents short. Stock down about a half, or actually about almost a third of 1%. And very similar to Fiserv, we had this big move up in early June, but we're still trading off of those highs. So this has not been a very good relative performer. And I would not have been expecting a big report, to be quite honest. When companies are not trading better than the S&P 500, when they're actually underperforming the S&P, I don't look for great reports. There's a reason why they're underperforming. How about MetLife, MET? Stock also down after hours after missing. Look at this. It's down below its June high. These stocks, relative strength, I can't emphasize this enough. Relative strength is one of the most important criteria when you decide to buy or sell a stock. If you're not looking at relative strength, I think you're really missing the boat. And I'll be going over that, repeatedly on Monday night in this sneak preview, because relative strength is such a big part of our strategy at Earnings Beats. We want leaders. And the problem is you look at leaders and they're overbought. Well, why are they overbought? They're overbought because everybody in Wall Street is accumulating the stock. If you're waiting on the big pullback, and then the thing is psychologically, when you get the big pullback, then you think there's something wrong with the company. Just eliminate all of those headaches. Just look at relative strength. Look for the strong groups and the strong stocks within those groups. And if you can get a great, pullback to the 20-day, that's awesome. I'm not a big fan of chasing after a stock's been up 7 days in a row, but there are plenty of stocks out there that they're not all up 7 days in a row. They're not all stretched and overbought. You have plenty of opportunities. Just wait on the pullbacks. Let's see, some other stocks of interest maybe in terms of these earnings that came out after the bell. Let me see. How about Etsy? Etsy reported 75 cents. The market was only looking for 42 cents, and the stock's down 1%. But this one, I think the good news was built in. And so when I get a gap down after earnings on a company that's been very strong and they deliver great results, when you get a buy on rumor, sell on news type of event, many times that sell on news gives you an opportunity to get in at a cheaper price. So this is one I'll definitely be watching on Thursday to see what kind of selling maybe comes in. How about Fastly? FSLY. This is another stock, by the way, big, well, I'm not going to say big beat. They were expected to lose a penny. They actually had a beat of 2 cents. So they did beat by 3 pennies on their bottom line. The stock's been going straight up. It's down 13% after hours to 94.40. Been waiting on this stock on a pullback. Well, you're probably going to get it at the opening bell tomorrow. Fastly not trading very well. Another one, Live Nation. Now, this is one that kind of in that airline category. I mean, concerts have been canceled. So a company like Live Nation, you can see not even close to where it was back in June. They had a bigger loss than expected. Market was expecting $2.10 loss. They actually lost $2.67, down another almost 3% after hours today. It's just not time yet. And I would be really paying attention, watching to see, I want to see some kind of a breakout and some relative strength. We're just not seeing that yet. All right, let's keep going. How about Nuance? Nuance, which is NUAN, Nuance Communications. This is a stock that was expected to earn 12 cents. They came in at 18. Really nice beat. Stock's been in a big uptrend, though. It's up a little bit after hours. Maybe after earnings, we'll get a little sell-off. Maybe you can see that one at the 20-day moving average. Albemarle, ALB. Stock came in 86 cents. Market expecting 72 cents. Watch this one because we closed. It looks like we closed at a new high, and it looks like maybe we're going to open up. This is one of those stocks, if it opens up and pulls back early in the day, especially if it were to get anywhere close to that 20-day moving average, that's one I could really consider getting into. Again, nice earnings beat. Stock's been showing some strength. Volume's been coming in. I'd like to see a little sell-off in the morning. And then let's see, one of the renewable energy stocks. The stock had a big day on Wednesday. I'm not showing anything after hours. Maybe I can check one other source that I have that's on my other computer, so just bear with me for a second. And then we'll get into the 3 you must see really quickly. After hours, I'm not seeing anything just yet. No, I'm not seeing, I'm seeing bid and ask right around that 1150 level. So I'm not really seeing a reaction, but the earnings on the stock came in, instead of a loss of 42 cents, the loss was only 22 cents. And this stock did make a big breakout here, as you can see, last couple of days. So really strong action on SunPower. This will be one to watch tomorrow. If you get a sell-off, after stronger than expected earnings, sell-off back to 10.5, 11 could be a great entry. All right, let's get into the 3 you must see. I'm going to start off. I'm going to do the 3 highest traded S&P 500 companies. And so I'm going to go through these very quickly. But first is Ford Motor. Just not a strong company. Look at the relative strength versus autos. I have no interest in Ford at this point. Next up is GE. GE, also look at this, down near its May low. I mean, am I going to be interested in GE? No. Terrible relative strength, no interest whatsoever. This last one, though, AAL, I mentioned that the airlines, it's starting to come back up over that 20-day. Relative strength just moved to about a 5-week high. Volume picked up. I don't know. This one's got a chance to run up to about 1350, 1360. And then let's see if it can break through. If it can break through, we could really get a run going on AAL, especially with as many shorts that we have out there. All right. I need to wrap this up. Appreciate everybody tuning in. Have a great day on Thursday and happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.